This is Ralph Sass, and this is Accounting 212, Chapter 5, the second part of the lecture. And where we left off on Part 1 was computing, equivalent units. Now what we need to do is turn this into costs. We need to figure out the cost for every bottle of paint, gallon of paint that's coming off the assembly line, or every ton of paper, or every bottle of Coke, what have you. So what we did before is we calculated units. Now we need to worry about costs. So we're continuing the same example here. And notice it was the beginning work in process, had 400 units that were 40 and 20% complete, and we had costs. Okay. Also, just as a recollection, just to kind of refresh your memory, remember we're doing a weighted average. Okay. And then we know that what the costs were added during the period, the month, the week, the year, what have you. And once again, we have it for materials and conversion, and we have those numbers. Okay, so we've already computed, the weighted, equivalent units of production. Now we have to do something with these costs. So what we need to do, okay, to figure out the cost per equivalent unit is we take the cost of the beginning work in process inventory, add to that the costs during the period, the costs that were added, and divide it by the equivalent units of production. And we're going to do this for both materials and conversion. Okay, each of them have different costs, each of them have different costs that were added, each of them have different equivalent units, and so we're going to come up with a cost per equivalent unit for materials, a cost per equivalent unit for conversion, and then we can multiply that by how many units were transferred out to figure out the total cost of what was transferred out to the next department, or ultimately that went to finished inventories. So notice what we have here. Okay, we have our total costs for work in process. Okay, we have our total costs for work in process, and we have a total, and then we have the materials and conversion, and it's materials plus conversion. It's going to equal that total. Okay, and so what that gives us is $124,740 in costs were added for materials. We produced 5,940 units. So to figure out the cost per equivalent unit for materials, all we need to do is divide those two. And likewise for conversion, we're going to divide those two. So when we divide them, what do? We get cost per equivalent unit for materials at $21, cost per equivalent unit of conversion for $15. And how do we get that? 124,740 divided by 5,940, and 85,000 divided by 5,670, exactly what I showed you earlier. So the cost per equivalent unit, I want to add one quick note here. Okay, hopefully. This is the cost for each transferred out unit. For the units that were transferred out, we're going to take $36, multiply it by how many units were transferred out, and that'll tell us how much of that good, the value I either move on to the next department or that I move on to cost of goods sold. So now we can go ahead and apply the costs. Okay, notice ending work in process. What did they have here? They have the equivalent units. Those are in units, 540 and 270. Multiplied it by the individual amounts for each, 21 and 15. Okay, and that tells them the ending work in process inventory. And notice the ending work in process inventory is 11,340 and 4,050 for a total of 15,930. That amount there would show up on our balance sheet, okay, as our work in process inventory. These two amounts here become important because they're the ending work in process for this period, but they're going to be then the beginning work in process for the next period. And then we take the units that were transferred out, multiply that by 21 and 15, and get the 194. Now, it's my preference, just because I have a tendency to make errors, okay, to make this a little bit simpler perhaps, and say if my cost for materials is 21 and my cost for conversion is 15, that means my total costs are $36 per unit transferred out, and just multiply it by 5,400, and I'll still get that 194. To me, there's a lot less opportunity to make an error by doing that. Okay, that's just, Mr. Sass trying to reduce the opportunity for me to make foolish math errors. Now, what most businesses will have is some form of a reconciliation, because all the costs that get into the units that are either the beginning work in process or what we added have to be accounted for. And so what we'll do is we'll do a cost reconciliation. Beginning work in process plus the costs added were 199 for a total of 209. And then that should total the 15,390 and the 194.4. Where did those 15,390 and the 594 come from? Let me get it. There's the 15,390. There's the 15,390. There's the 194.4. So that's where those numbers are coming from. 15,390, 194. And notice the totals. 209,790, 209,790 are equal, meaning I am accounting for all of my costs. Okay. Sometimes there's a need to modify this in some way if there are a number of different products that are using the same process. So if you have different products that are coming through and using the same process, you may have to do a little variation on this and do a little bit of job order costing and a little bit of process costing. That concludes the weighted average. Just a couple of quick notes here on the difference between FIFO. Keep in mind, FIFO is more accurate costs, especially if costs are changing frequently and quickly. It's not necessary in the event you're doing just in time, because then those costs should be nearly identical. If you're maintaining inventories of raw materials or whatever from one period to a next, FIFO will be more accurate. It's also more difficult to calculate. I don't believe, if I recall, I have any absolute calculations here. I just kind of show you what would need to be done. Okay, so the FIFO is more accurate, and it's more accurate in completing the computation of equivalent units and the way those beginning costs are treated. So it is more accurate, but for purposes of class, whatever, we're just going to do. Okay. Notice what this says, and this is exactly what I made mention of a moment ago. In the event of a lean operating production environment, FIFO and weighted average are going to be very similar. Okay. So from that perspective, if you're using just in time, they're both going to give you approximately the same number. But FIFO is a little more accurate, or is more accurate. If you want to know more on calculations, whatever, you can take a greater look in the appendice. Okay. The next part is the last part that I'm going to talk about in this chapter, and it's service department allocations. And this becomes important. I used to work for a business where this became a huge issue. And the issue is very similar, is how much costs should be allocated to a particular department. And there are a lot of different ways to do it, and so let's take a kind of a quick look here. Okay. Notice we have operating departments that are doing various things. Okay. And an operating department carries out the central purpose of the organization. Depending upon the organization, you'll have different operating departments. And then you also have service departments. Okay. They don't directly engage in operating activities. Human resources is probably the big one. Accounting could be, legal could be, a whole bunch of different opportunities or options there for different service departments. And now the question becomes, if the service department becomes an overhead cost to the operating department, how should I allocate the cost? So what we have going on is the costs of service of one department become the overhead costs to the operating department. The accountants help out the plant. How do I assign the cost of the accountants to the product or the plant, or should I? Now, this is not necessary for financial reporting purposes. Where it becomes critical is for decision-making purposes. There are 3 methods to do this. For purposes of this class, we're going to talk about the direct method and the step-down method. The reciprocal method gets very, very complex, and I'll briefly describe what's going on, but we're not going to talk about that in any great detail. Okay. Quick note on terms here. When one service department provides services to another service department, we call them reciprocal services. Okay. Now, an example of this could very easily be custodial, and suppose I have a cafeteria. Okay. Neither of them are in the business. I may be a law firm, and I may have a cafeteria and a custodial staff. Okay. Both of these are servicing my attorneys, whatever, in the firm. But I have the custodial staff that cleans up the kitchen. So they're providing services to the cafeteria. Okay? Those are what we call reciprocal services. And notice, okay? So notice the way we can do this. Okay? First way is that what we call the direct method. It's the most straightforward. And what happens is the interactions between service departments are ignored. So the fact that the custodial is cleaning the cafeteria is irrelevant. What we're going to do is we're going to take those service department costs and assign them either to the operating department of machining or the operating department of assembly, and we ignore the fact that, the custodial staff is cleaning the cafeteria, and the cafeteria may be providing the custodial staff with food. Those interactions are ignored. So notice what we do to assign costs in this case. We're going to have some sort of allocation base. Okay. In this case, the cafeteria is number of employees and the custodial is square feet. Okay. So what we have here are number of employees and the square feet, and we're going to ignore the interactions between the two. Okay. Notice that I only highlighted the ones under the operating departments because I'm going to allocate my service department costs over to the allocating department. So notice what's going to happen here. Okay, we're going to take the 360 grand. There are 20 employees in the machining department. The total between machining and assembly were 50 employees, so my denominator is 50. So 2/5, 20 over 50, of the 360 is going to get allocated to machining. And the other 3/5, the other 3/5, 30 over 50, is going to get assigned to cafeteria. Okay, or pardon, to assembly. Okay, because the allocation was the number of employees. I'm going to do the same thing with the custodial, but now keep in mind the base was the square feet. So the machining department had 25,000 square feet. The assembly department had 50,000 square feet. In total, they had 75,000 square feet. So I'm going to take the 25 grand, okay, the square feet for machining, divide it by the total, and I'm going to move 1/3 of the costs to machining. Then I'm going to do the same thing for assembly, and notice what's happened when all is said and done. What I have just done is I've allocated my service department costs onto my operating departments. Okay, now keep in mind this would not be used for cost of goods sold. It would be used for internal management decisions. Step-down method. What happens in the step-down method is we're going to allow one of the departments, in this case the cafeteria, is going to be able to push their costs down onto the custodial staff. but they can't push it back. They can't push those things back to the cafeteria. The way I look at this is the old kids game, no give backs. Once I've given you a cost, you can't turn around and give it back to me. Notice what's going to happen in this case, okay, are a couple of key things to realize, okay. I think I got it. Let's see if I can. Some points to understand in both the direct and the step-down method. Okay, in both the direct and the step-down method, any amount of the allocation base attributable to the service department whose cost is being allocated is always ignored. We didn't include the number of employees and the square feet that the cafeteria and the custodial staff were using. So when we're allocating it, we ignore that allocation base. Okay, and any allocation that's attributable to the service department whose cost has been already allocated is ignored. So we're not going to, there's not going to be any give-backs, if you will. Okay? And notice the service department assigns its own costs to the operating departments, plus the costs that have been allocated to it from the other service department. So going back to the picture here, when the cafeteria puts some of their costs down on the service department, on the custodial staff, where do those costs go? The custodial staff throws some of those costs on the operating department of machining and some on the operating department of assembly. So that's the step-down method. Then if you really want to get fancy and complex, okay, there's the reciprocal method, and that's, in this particular case there are give-backs, okay, and this is graphically what it would look like in that particular case. Okay, just one quick note about the real world. Okay, and I've seen this happen in situations. Suppose you have two departments. Okay, and one has 75% or 70% of the space, and the other one has 30% of the space. Okay, do we use 70-30 as the allocation? Alternatively, perhaps suppose they have 50% of the employees and 50% of the employees. Okay, in essence, some of these employees are crammed into smaller spaces, some of these employees have bigger offices. Do I allocate expenses 70-30 or 50-50? I have seen companies go to have large arguments over how those costs should be allocated. So that's a spot where managers step in and will make some of those decisions. That concludes the Chapter 5 lecture. Once again, if you have any questions, please feel free to let me know. Thank you.